All right. Great. Here we are with Tim Beiko. He facilitates the Ethereum core devs call, the all-important meeting where Ethereum developers talk about the future of Ethereum and all the different implementations. And there's big news on just that today. So super excited to have Tim on board and to tell us about all the major milestones that are about to happen on Ethereum. It is a pretty momentous year for the most active blockchain network in the world. So Tim, welcome to the show. Thanks very much for coming on.
Thank you so much for having me. I'm glad we could make this happen.
Yay. Yeah. Okay. So I usually start the show by asking guests to tell me about themselves and their background. But because we have breaking news that Tim proposed a launch date for EIP1559, I want to start with that. Can you explain, first of all, just step back and explain what EIP1559 is? Why is it important, and it's such a big deal that everyone has kind of been looking forward to, or
sure.
Not everyone, I should say, but
yeah. Sure. So quick overview of 1559. It's a pretty big change to Ethereum, and that's one of the reasons why people talk about it so much, because it affects a lot of things. But at a very high level, what it does is it makes it explicit in the protocol what's the amount you should pay for a transaction. So right now, when you use Ethereum, everybody sets their gas price, but the protocol doesn't tell you what's the right gas price, right? Like the way that this happens is your wallet, say you're using MetaMask or MyCrypto or something else, they'll look at all the previous blocks based on the data and how much people paid in those blocks. They'll try to come up with an estimate, and they'll put that gas price on your transaction. But very often that will be wrong in a way, right? And we've all had this experience. You send a transaction on MetaMask, and it tells you it's going to confirm in 2 minutes. Then you refresh the page, and now it's 7 minutes, and so then you're speeding it up. And it's just a very clunky process. And one of the reasons for that is, like I said, there's no notion of the correct gas price in the Ethereum protocol today. So what 1559 does at its core is it adds this to every block. So every block will have a new value called the base fee per gas. And this base fee is the minimum that you need to pay for your transaction to be included in that block. So it makes it very easy that you can look at a block, say, okay, this is the minimum price I need to pay. So I'll just put that as my transaction fee and get my transaction included. There's a lot more nuance and subtleties, but that's kind of the gist of it. And one, the first question people ask about it is well, that sounds pretty simple. Why can't we just have that already? One big challenge in gauging what's the right gas price to give users is we need to figure out what's the demand for Ethereum block space right now, right? Because the supply of block space is pretty fixed. We know we have one new block every 15 seconds. The gas size is fixed every block. And right now, all these blocks are full. So if you just ask the network, what's the demand, it'll tell you 100%. And that's not a very useful indicator. So what we do with EIP1559, the other big change is we make blocks twice as big. So say right now we have 15 million gas on mainnet. We'll expand them to 30 million, and we'll aim to keep them only half full. And when they're more than half full, we'll just raise this minimum price. So it kind of like Uber surge pricing in a way, where if everybody wants to get a Uber at the same time, the price goes up to kind of discourage people. But then the opposite is also true. So if we're less than half full, we'll just start lowering the minimum price. So this is the way by which we can gauge demand. And it has a nice side effect in that most blocks will always have kind of extra room, right? Right now, blocks are basically always full. So when you send a transaction, you're kind of waiting. And if somebody bumps in line in front of you with a higher gas price, then you're waiting behind them. But with 1559, if you assume the average block is 50% full, it means when you send your transaction, the next block should have some space, should have some spare room to include it. So you should be included right away. And so it should help kind of the average users, assuming you're willing to pay the current price on the network, get their transaction included much quicker.
So we'll.
And then,
Oh,
yeah, go ahead. I was going to say, there's just the last part of 1559 is the fee burn. So that's what a lot of people kind of focus on. But the reason for the fee burn is because we have this minimum fee that can go up and down. And we want to use this as a reliable indicator for demand on the network. If we did not burn the base fee and we just sent it to the miner of the block, what the miner would do is they would fill the block with their own transactions so that it would raise the fee for everybody else, but then they wouldn't actually pay this fee because they would get the transaction fee back. And so the original reason to have the fee burn as part of EIP 1559 is really so that miners are kind of indifferent as to whether the minimum price is high or low. They're going to get a small part of the transaction fees for every transaction, but it shouldn't be higher or lower based on the base fee on the network.
So do miners get a fixed fee?
So they'll get, basically right now, transaction fees on mainnet represent three things, right? They represent one, you just getting included in a block, two, how quickly you are or how early you are included in the block, and three, your kind of competition against everybody else who wants that. So after 1559, miners will not get this base fee. So this base fee is burnt, but every transaction will include a small part of the fee to go to the miners. And that basically compensates miners for running nodes, for the risk of having basically uncalled blocks. So if miners got zero fees at all, they would just mine empty blocks and not even bother kind of maintaining their transaction pools and propagating bigger blocks on the network. And the other part of fees that miners will still get is everything related to wanting to be the first in the block. So these are the fees related to MEV or miner extractable value. When people have, say, an arbitrage transaction that they want to do on Uniswap, they're willing to pay a lot of money to get that transaction included first in the block because otherwise that arbitrage opportunity is gone. And so they'll still be willing to do that even after 1559, and miners will still be able to collect all of those fees. So it's really just kind of the minimum fee per transaction to be included in a block that gets burnt, but then the other part of the fees goes to miners.
Right. And so that means that 1559 doesn't really have an impact on MEV, on miner extractable value?
No, it doesn't. So, I mean, the MEV, like teams that work on MEV will have to like adapt to 1559 and just add support for it, but it won't reduce or increase MEV. Yeah.
Okay. And what percentage of total fees is that base fee that miners won't get anymore?
Yeah. So there's no exact value yet. There's been different estimates, and it's probably the one thing people are eager to see after mainnet. The estimates range from 25 to 75%. So it's like a really wide range that I've seen. And it really depends. The challenge with those estimates is it depends at what period you look at. So if there's like a period where not much is happening on chain, then there's probably going to be not a ton of fees going to miners. But if there's a period where there's a bunch of things happening, like a bunch of liquidations or just some new DeFi protocol launches, everybody wants to get in. Then those periods where there's like really high activity, the fees for miners will be quite high at that point because people will be willing to pay high tips to miners to get included. And so, yeah, that's why it's so hard to tell, because you kind of need to average, say, well, how often do these periods of very high activity happen? When they happen, how much are people paying in total? And, based on how frequently they happen, what's like the average over time? So we don't have those numbers yet.
Okay. It seems like this is a pretty negative change for miners. Like, how was it that that this is going through?
Yeah, so I'd push back a little bit on pretty negative, right? Like, obviously there is it does reduce some of miners' income, and that's pretty clear. But it's worth noting 1559 is not the only thing that affects miner revenue, right? The two transaction fees are one part of it. But the two other big parts are the block reward and the difficulty. And so the block reward and the transaction fees are denominated in ETH. So obviously the value of ETH against the dollar matters a lot because miners' costs tend to be in the real world. So they tend to be denominated in dollars. if they get a 2 ETH block reward at 4,000 ETH, it's, twice as good with regards to their cost as at 2,000 ETH. And then the other thing is the difficulty on the network, right? How many other miners are mining at the same time? So with a given kind of set of hardware, if there's more people mining, you're going to make less money. And if people go away, then you're going to make more money. And so these two variables affect mining revenue to like a much greater extent than transaction fees. And especially if you look at the entire development history of 1559, when it was first proposed, transaction fees on Ethereum were basically zero. So this wasn't kind of a major concern. And the original version of the EIP actually had that listed, saying like, this won't be a big deal because, miners make almost nothing in transaction fees anyways. And then,
interesting.
Yeah, but then last year, when we were kind of in the middle of the development of it, and there was probably the most miner revolt was basically when DeFi summer was happening, and fees were just crazy high. And I think then, like miners were looking at that and saying, well, if this cuts 75% of the fees, the fees are almost bigger than the block rewards, then that cuts half of our income or something like that. But the fees have dropped since then, right? Like the fees have dropped since, like they were at 500 Gwei. I think today they're like at 100 and people think that's high. Just last week, they were like sub 10 Gwei. And 1559 is not live. So clearly, miners are able to adapt to that variability in fees. And I think, the last thing is, if you look at like the needs of the Ethereum network, we want the network to be secure, right? Like, that's the number one thing. And the security of the network, or the security needs of the network don't change based on the gas price. So, if we think that the network is not secure enough, we should probably do something like raising the block reward, because we'll get more miners to come in and it'll be like a more predictable source of revenue for them. Then relying on transaction fees, because as we've seen, transaction fees can go up and down. And if we're only secure on the network at like a 200 Gwei or more transaction fees and we go below that, then that's like a terrible place to be in. And I think as we're seeing now, the network can operate fine at sub 10 Gwei prices. So I don't think it'll be that big of an impact at the end of the day. But it definitely felt much worse when like gas prices were 50 times higher than they are today.
Yeah. No, great points. Another question on kind of the explanation that you gave earlier on increasing the gas price per block to make it so that each block is half full. I mean, could it just happen that with time, as more demand, as demand for Ethereum block space increases, that like blocks get full again?
Yeah. So that's a great question. So basically the way it works is the base fee goes up very quickly. So it goes up about 10x in 5 minutes of full blocks. And that's exponential. So in 10 minutes, it'll go up 100x. In 15 minutes, it'll go up 1,000x. So that means that if there's a ton of new demand, say, Uniswap launches their governance token, everybody wants to go claim Uni. When that happens, in that short period, prices will go up a ton because everybody wants to use. But at some point, once we're, say, at 500 Gwei or 750 Gwei or 1,000 Gwei, there's not that many people that want to do transactions at that point, at that price. So they'll stop making transactions, and then, we'll have slowly, we'll get 50% full blocks again. And because the speed adjusts so fast, in like 10, 15 minutes, we can get like 1,000-ish X range in gas prices. It's unlikely you see cases where there's more than that duration of full blocks, because then you'd be at 10,000x or 100,000x increase in gas price. And I don't know, to give your listeners an idea, like in the whole history of Ethereum, we've seen about like 1,000x range between like the lowest and highest gas prices. So what happens if there's more demand? What the base fee will just increase up to the point where there's about 15 million gas of demand at that price. And, people who want to pay more, they just will pay that amount and get a refund for the rest. And people who don't want to pay that amount will just have to wait for it to come back down.
Okay, got it. Okay, and then so on like today's announcement, what does this mean? So like if you can kind of like walk us through what's been kind of the status of EIP
Sure.
1559, like how it's been on testnet, and so like and like what does this launch on August 4th mean?
Yeah, so 1559, as we've been discussing, is a pretty big change to Ethereum. So we've tested it very extensively for the past year. We've, run analyses on it, like run up some new test nets, spammed those test nets, found bugs, fixed them, and so on. So it was really like a long process to get it to a spot where we could even consider deploying it for mainnet. Late this winter, early this spring, we decided to add it to mainnet. And then even there, as we were finalizing things and whatnot, we wanted to be sure that the deployment on testnets was smooth before we even thought about scheduling the date for mainnet. So we scheduled the three testnets, Gordy, Rinkeby, and Robston. And now we've had the first two fork can go successfully. So we first had Robston. When Robston happened, we basically spammed the network for a day to make sure that the base fee would go up and come down, and that we could handle, large blocks on the network. Then we had the Gordy fork last week, where we spammed the network before and after the transition. So just to make sure that, like, even as there's demand on the network, everything works smoothly. So now we're in a spot where, like, we're pretty confident it works, nothing broke. And so now core developers were comfortable agreeing on a date to deploy this on mainnet. So this morning, I proposed August 4th. It's still not 100% final because developers are across, different time zones. I wanted to leave at least 24 hours for any team to say if they're not ready. Like, if a team doesn't feel like they'll be ready by then, we should obviously change it. So assuming so far nobody has stepped up and said that, assuming that doesn't change, tomorrow, then yes, we would be looking at August 4 for it to go on mainnet.
Wow. Okay. So a huge change on Ethereum is just a few weeks away. So what should Ethereum users, ETH holders, ETH developers, I guess, expect from this? Like, how will they be impacted?
Sure. So I guess the first thing that's worth noting is 1559 is opt-in a way. So legacy transactions will keep working on the network, and they'll kind of behind the scenes be converted to 1559 transactions. So the base fee is still burnt in them, so they don't get around the mechanism. But if you're using a wallet, or you are a wallet, and you're looking at this and you're like, there's no way we can be ready for August 4th, that's totally fine. Like, legacy transactions will keep working. And that's something that was really important as we were developing this, because it can take time for people to upgrade. Or if, imagine you've already signed a transaction and, you want to just broadcast it after the fork, that'll also work. So for most people, you basically have to do nothing unless you want to. If you're running a node on the network, you're going to have to upgrade to a node that has the London network upgrade. We don't have the client releases out yet. They should be out next week. There's going to be a blog post on the blog.ethereum.org website. So you just need to download the new version there, and that will make sure that you stay in sync with everybody after the upgrade. And similarly, miners will have to do that, exchanges and whatnot. Yeah, and that's pretty much it. I mean, if you are a user or smart contract developer, you can use 1559 through any of, like, the wallets that will support it. I know MyCrypto and MetaMask are working quite hard on this right now. I'm sure others are too. It's just those two I've been talking with, so they're not the only ones, but the ones I'm aware. Yeah, and also for smart contract developers, one thing that's really nice is alongside 1559, London will also bring a new opcode in the EVM that returns the base fee for a certain block. So if you're doing things like automatically generating transactions in your smart contract, stuff like that, you'll be able to look at the current block or the previous block's base fee and kind of set the price for your transaction automatically based on that. And one last thing, it's also worth noting, if you are like a developer or even a user and you want to try this, it is live on Gordy and Ropsten right now. So you can go on those networks and play around with it and experiment.
Well, and then for end users, what will it mean in terms of gas price? Like, should people expect lower gas prices? Or you mentioned that it might get pretty volatile at times. So what should they expect?
So it won't drastically lower gas prices, right? Because gas prices are a function of supply and demand. And so, the supply of block space at Ethereum is pretty fixed. And the demand varies a lot. So if a lot of people want to use Ethereum, like the gas prices will go up. There's nothing that, you can do about that except stuff like layer 2, basically like it's creating more supply of block space. Sorry, I got lost there.
No worries. So what should people expect?
Oh, yeah. Sorry, with regards to the gas prices. Yeah. So it won't lower the gas price, but it'll make it clearer what the right price is. And one way to make that kind of a bit less abstract is if you look at blocks right now on Etherscan, and you look at, say, like what's like the lowest 10% price that somebody paid and what's like the median price. Sometimes there's like a 5 to 10 times difference between that. So that means that two people in the same block, literally, somebody paid like 5 times more than the other, but their transaction gets executed at the same block. And this excludes MEV. So what it'll mean is that everybody who gets in the same block pays roughly the same price, right? And one kind of non-blockchain analogy for that, one of the researchers working on this did is right now, if you're making a transaction on Ethereum, it's kind of like buying a house in a hot real estate market where, like, say the house is listed at $1 million. A lot of people want it. So like you're going to put $1.1 million. I put $1.2 million and somebody else puts like $1.5 million. And like they get it, but they overpaid by, like $300,000 because they could have just basically put the second highest price and still won. And now transactions on Ethereum are basically like that. But it's not only the person who buys it that pays, it's like everybody included in the block, right? Whereas after 1559, it's more like when you buy something in a store where like it'll tell you, look, the minimum price for this blocks is X. And if you want to buy it, if you want to have your transaction included at that price, you can just pay it. And otherwise you just don't, right? But at least you know that if you've paid, you've kind of paid the fair price. And if you choose to not pay, like, what the price was, right? So that's the effect that it'll have on gas prices. And it's a bit more subtle than whether it'll raise or lower them. It just helps reduce the variance within a single block of the gas prices.
Perfect. No, I love that analogy. It makes it super clear. Okay. And then now I think it's time to get more of your background after you explained in great detail everything about 1559. Would love to just learn more about yourself. Where did you come from, and what got you interested in crypto in the first place?
Sure. So like I said, right now I run the core developer calls. So these are the calls where developers of the Ethereum protocol get together to decide what changes will happen to the protocol. I've been working in this space for 3.5 years right now. Before doing this, I was a product manager on one of the client teams. So as part of Consensus, I worked on their Besu client. And before that, I was also a product manager, but just following the space a bit more as a hobby. I first heard about Bitcoin in, I think it was 2013 or 2014 from a friend. Seemed weird at the time, so didn't do much about it, unfortunately. And then a couple years later, when the DAO was about to launch the project on Ethereum, he mentioned Bitcoin again and Ethereum. So then I got interested. I bought Ether literally the day before the DAO got hacked to invest in the DAO. And that was kind of a wild onboarding experience because right after that, there was Ethereum Classic and you had to split your tokens to make sure that you wouldn't get your transaction replayed on the other chain. And I knew nothing about Ethereum other than the name then. So it was quite a stressful experience. And after that, it kind of felt like things died down pretty bad for a year. So I kept following, but frankly, like not that much was happening. And I really started paying attention again. I think it was like late 2016 when you started seeing the first projects have token sales on Ethereum again. Like it felt like at least there was like some renewed interest in the platform and it hadn't like completely died. And then in 2017, there was obviously this like huge ICO boom. And what I found interesting was like, it showed there was tons of demands for Ethereum. Like even though, all the ICOs could have been scams, and it turns out, I think people were probably too harsh in criticizing them in like 2018, 2019. A lot of them today are actually working. But I was like, even if all of these are scams, in a few years, there will be some other use case for this thing, right? And when there was the ICOs in 2017, it just like grind the network to a halt. Like it just showed how like brittle the protocol was. So that's when I decided I wanted to like work at the protocol layer. It just felt like there was a lot of demand, a lot of work to do. And yeah, it took like, I think a year to go from just, contributing part-time and learning to getting a full-time job in this space. And I've been doing that ever since.
Very nice. And what do you think kind of attracted you to just like keep following Ethereum, even like after the DAO, even after like it seemed like there was nothing going on?
Yeah. So there's a few things. Like one, it's funny, like blockchains are like a category today, but like I think like when Ethereum launched, there was Bitcoin, there was a bunch of other like random coins, but Ethereum was really kind of this unique thing. Like it was kind of hard to categorize. Like it was quite different from like Bitcoin and Litecoin and Monero. So I don't know, just like some interest in like the fact that it was such a novel experiment. I think the community, like, the quality of like the Reddit and like their research updates even then was quite good. So yeah, it just seemed like very interesting. And, I think this is also a pretty common experience. Like when you buy like the token and something, you kind of feel more invested in it. Ether crash, I think it was like 75, 80% after the DAO. And at that point, it didn't even feel worth it to sell anymore. But it was like, well, I guess I'll just keep following it. Like, who knows? Yeah, so I think, a combination of those three things, just like the technical interest, the community, and the fact that you're already kind of invested in it.
Very cool. And wow, and here you're kind of like at the very core of it. So, okay, so I also wanted to ask you about another like I guess like key part of 1559, which we kind of briefly went over. But the fact that this burning mechanism basically, like what does this do to ETH? The asset.
Yeah. So I think, basically at a very technical level, what it does is every time there's a transaction, it burns a little bit of ETH. And the more people want to transact, the higher the base fee will be, the more ETH gets burnt, right? Like, so from a very, objective level, that's what it does. And, people like to talk about like the impact on the price and whatnot. And it's always a bit hard to talk about that because there's so many variables that affect something like the price. So if you were to like isolate every single variable and compare, Ether with the burn and Ether without the burn, obviously with the burn, you're going to get a lower supply. And if there's the exact same demand for Ether, the price should be higher, right? But if I say that, and I don't know, the price today is like 2,300, something like that. Like, I don't want people to like buy Ether thinking, well, the burn will make the price go up because tomorrow, the US could like ban Ethereum and the price could go to $500, right? Like even if we burn a bunch of Ether. So I think, it is like it creates a positive pressure on the price because it reduces the supply if you assume that the demand is constant. But that's like a very, very risky assumption because so many things influence demand for that. I guess the way I like to see it is it's almost like it fixes some economic bug in Ethereum where if like you tell somebody who knows nothing about blockchain, about Ethereum, they'll kind of assume that, the more usage there is on the platform, the more the platform will capture value. They maybe won't be able to say how, but like it's kind of an assumption you'd make. And today that's not true, right? It's like more people using Ether does not really have any impacts directly on the network value. Whereas if you do burn more and more as more and more people use the network, then it does create like this positive feedback loop. And I think that's really valuable. And if you look at it, like it feels like the longer term you look at it, the more you can probably draw a correlation, because if you assume that like the usage keeps growing over a long period of time, then the total amount burnt will be much higher, and it'll represent like a meaningful part of the supply. I think two more things to consider is one, like the price of Ether is interesting, just by virtue of being the price. But one thing that it's kind of like economic bandwidth for Ethereum, because when Ether is used as a collateral, it's like the higher the network value, the more loans on MakerDAO can be opened that are denominated in dollars, and the more the larger the collateral can grow, and the more you can kind of support a big economy on Ethereum. So I think that's like the part I want to optimize for. It's like, how over the long term do you align like Ethereum's growth with like a thriving economy on the network? And yeah, the last part about just like the burn, people talk about like deflation and the impact on that. So it's worth noting that, in order for the burn to lead to deflation, you need to have the base fee be higher than like the block reward for whatever period you're looking at. And specifically that excludes the miner tip, right? Like, because that part of the transaction fees doesn't get burnt, it's not going to contribute to deflation. So when people are like trying to estimate that, I think it's important to look at, well, obviously what's the inflation today and how is it going to change? And with the merge from proof of work to proof of stake, it'll reduce by, I think it was something like 8x roughly. So it'll obviously get much lower. But yeah, we also need to be mindful that like if there's like a medium high base fee and high tips, then it's only that kind of base fee that gets burnt and that contributes to the deflation, and not the entire transaction fee.
Right. Okay. So I guess there's like many different variables to consider before saying, burning ETH because of EIP-1559 directly will contribute to ETH price increasing, or to ETH being deflationary. Like many other things will also have to happen, like increased demand. Like, I guess like sustained increased demand is kind of like the main thing that needs to kind of be true for that to happen.
Yeah, and increased demand is important for two things, right? Like it's important, obviously, for people buying the asset if you care about the price, but it's also important if you want to have a high burn, right? Because like this is basically what gets burned is the function of the demand for the network. So so I think the burn is kind of like a nice marginal improvement, but like if there's no demand for Ethereum, it won't do anything.
Makes sense. So I guess to put like a bit of numbers to this right now, and correct me if I'm wrong, I think kind of the last time I looked at this up, Ethereum inflation was around 4% annual inflation. Is that right?
I know the block reward, but I don't know the percent, like the yearly based on the supply. I'm not sure.
Oh, okay. Because I was gonna ask if that's kind of the current inflation rate. If there are like any estimates on like.
Yeah. So what I did calculate is like how high does the base fee need to be in one block for that block to be deflationary, right? And so on proof of work, it's roughly 150 gwei. It's a bit less if you don't count uncle rewards, but if you assume like some amount of uncle rewards, if the base fee is over 150 gwei, it should be like, and we have roughly 15 million gas, it should be like a bit over 2 ETH that gets burnt in that block. So that's like a rough proxy. But when we move to proof of stake, it's much lower. I forget, it was somewhere between like 15 and 30 gwei. So
that's so low.
Yeah, because the validator, because of proof of stake, you're issuing much less to validators than you are to miners on proof of work. the level at which the base fee has to be in order for the system to be deflationary is much lower. Yeah. But yeah.
So with like Gwei at with like gas at 100 Gwei today, that would mean on proof of stake, ETH would be deflationary, like at least today, at least at today's prices.
Yeah, exactly. Yeah. And on proof of work, you wouldn't be fully deflationary, but assume my 150 number is right and gas is at 100 today, then it means you'd basically burn 2/3 of like the block reward, right? So like, I don't know, 1 point something ETH, 1.3-ish ETH. Right. So you would still reduce it, right? Like it's not like, so there is always like a deflationary pressure, but to go from being, net inflationary to net deflationary, it's roughly 150 and 15 to 30 after the merge.
Super interesting. Okay, and then now that you mentioned the merge, this is another kind of huge milestone that ETH will undergo, I guess, in the next few months. So if you can kind of take a step back and explain what the merge is about.
Sure. So I think, it's worth taking like one or two step backs because a lot of people are still very familiar with the old, I guess, phase 0, phase 1, phase 2, Ethereum 2 roadmap. That's like a good point to start to explain how that's changed. So phase 0 has always been the beacon chain. So just having a proof of stake engine that's not attached to the current mainnet chain, so we can just test it in production because that is the most complex part of the system. Then the original roadmap would just add shards to this proof of stake engine, but not have the shard run computations, just have them store data. And then phase 2 would transform these shards from shards that store just data to shards that can actually run the EVM like the current Ethereum mainnet. So as the teams were working on this, they got phase 0 shipped last year in December, if I recall correctly, and then started thinking about, okay, what should we do next? And at that time, it started to become clear that rollups might be actually a better way to scale the computation on Ethereum than sharded computation, because we could get them live on mainnet before the whole proof of stake transition was done, because also it limits it doesn't require the protocol to decide what the rollup does, right? Like any company can go and create their own rollup implementation. They don't need to like come through all core devs to decide if it's okay, and like it's not a change to the protocol. So it gives like that power to the community. So as we kind of started seeing that, there was this shift, I guess, in the roadmap from saying, well, instead of having like all these shards that we first store data on and then turn to computation, maybe we could just use rollups, and those can kind of be the shards that run computation. And if we did that, then we could move to a system where maybe the only computation shard is the current Ethereum mainnet. We don't have to change anything about it. We can add rollups to it for scaling, and we can just move it to the beacon chain, or link it with the beacon chain in order to remove proof of work. So that was kind of like the first iteration of the roadmap. And then after that, there were two other changes done. The first was to say, well, right now, Ethereum clients like Geth and Open Ethereum and Nethermind, they're already used to using different consensus algorithms. So they use proof of work on mainnet, but on testnets like Gordy, they use proof of authority. So one researcher on the consensus team, Mikhail, started thinking, well, why, instead of having mainnet as a shard that's linked to the beacon chain, why don't we just combine them together and say, well, on this block use proof of work, and then on this block just start using proof of stake, and have that be like your new consensus mechanism. And that would just make it much simpler in terms of architecture. And so they started prototyping that. And I think it was in May, there was a big hackathon called Rayonism, where they actually managed to run these kind of combined clients of like a Geth or a Besu or a Nethermind that's running the EVM with a Teku or a Prism or a Lighthouse that's running the beacon chain, and that's serving as this consensus the consensus mechanism. And so this is kind of the design that we're going for the initial merge. It allows to keep basically all of the ETH1 clients, there's still significant changes, but we're not rewriting something from scratch. We're just taking what's there and adapting it so that it can communicate with the beacon chain easier. And that's what we're going to try and do first. We're going to, this way the operations on mainnet won't be disrupted. Rollups will still be a way that people can use to scale. And once that's done, we can add shards just to store data, because rollups end up generating a ton of data. If we have data shards, it'll be just much cheaper for them to store the data, and that'll be cheaper for user to use. But it goes from sharding being kind of a must-have to a nice-to-have, just to reduce costs. So that's kind of the goal. Like I said, we've had prototypes working in May. Now both teams on like ETH1 and ETH2 are a bit busy with London and 1559 on ETH1 and Altair, which will be the first hard fork on ETH2. But basically, as those wrap up, the merge will be the focus of both ETH1 and ETH2 teams.
Very cool. Okay, so I guess to like summarize a bit, so what will happen, what's expected to happen is that in the next few months, I mean, I've like heard different estimates, end of this year, Q1 of next year. What will happen is that Ethereum clients, and for those listening, Ethereum clients are kind of like what companies that run like Ethereum software. It's like the way to access Ethereum.
Yeah, they're like the nodes on the network. So like instead of running a single node, it'll still be like a single software package. But one way to think about it is like, say you're running Geth or Prism today, you'll be running like a combined version of like Geth or Prism or Nethermind and Lighthouse, and that'll be kind of your Ethereum node. And at the transition, it'll be like a bit weird because it needs to still have proof of work and have proof of stake. But once the merge has happened, you'll just have like your, part of your Geth node without proof of work. We call that the execution part. And then your, say, Prism or Lighthouse node, which we call the consensus layer. And they'll just be running together as like a single piece of software. So you'll need, everybody who's running a node on the network will need to change.
Two clients.
Yeah, and
like those two clients, right?
Yeah, basically. And, there'll be packages where, you just download one thing and they're all combined together. But one thing we do want to try and maintain is the ability to like mix and match, so that, if there's like 4 ETH1 clients and 4 ETH2 clients, that like you can choose the one of each that works the best for you. And the merge will just be saying, at this block, like, after this block on proof of work, then get the next block from the beacon chain and start adding transactions to that block.
Okay, so basically what will happen is that you will have clients or like Ethereum nodes running the Ethereum software, which will be dedicated to the execution layer of Ethereum, like the computation layer, like everything that is made to be able to run all the different Ethereum applications and run smart contracts and all of that. And then you will also have other Ethereum nodes running Ethereum software that are dedicated to running the proof of stake consensus algorithm instead of the proof of work consensus algorithm that's being currently used. And so like when you combine those two, like nodes running the like computation like operational layer, and nodes running the new like proof of stake consensus layer, you will get kind of the new Ethereum running on proof of stake without having to change any of like the current like applications that are now working on Ethereum.
Yeah, exactly. And there's going to be some small changes for applications. Just there's things that like, for example, the difficulty, there's an opcode that returns the mining difficulty right now in Ethereum. Proof of stake has no difficulty. So, there'll be some small changes where we need to fix like those features. But as like a general rule, like, Ethereum won't change.
Okay, and then so are there any updates on like dates for this merge?
So I think we're still pretty early for dates. I think it'll be like our main focus right after, right around August as we wrap up with London. I'm very cautious of saying dates because I guess the risk is like we still don't know what we don't know, right? Like so, with the information I know today, I can say, oh yeah, sure, we'll get Q4, but like maybe there's a thing that's like broken that we don't even know yet, and that'll delay it for 2 months, right? I guess the one thing I am pretty confident in, like I was a bit skeptical that this like bundled client architecture would work well. And the fact that in May we actually managed to get it up and running as a prototype in less than a month made me much more confident in it because, there might be a bunch of engineering issues we need to figure out, but like the general architecture works. But yeah, unfortunately, I feel like it's kind of too soon to be confident in a date.
Yeah, no, makes sense. Okay, and then when the merge happens, will kind of the main change for end users be the ability to withdraw staked ETH? Because right now, like the Beacon chain, like the proof of stake chain is live. People are staking ETH on the proof of stake chain, but you can't really withdraw ETH or like do anything with that ETH. So is that kind of like the first thing people kind of expect?
So that won't be at the exact merge point. And the reason why is that the merge is already complicated enough that we just want to like switch from proof of work to proof of stake, make sure that works and not like bundle any other changes at the same time. That'll be the first feature after the merge. So people are calling it kind of like the cleanup fork. So there's, obviously withdrawals is like the most important things. And there's a bunch of other kind of small things that we want to do shortly after the merge. And it just feels like doing it all together risks delaying everything longer. Whereas if we can just get like the merge tested and shipped, then, enabling withdrawals becomes a somewhat smaller change. Whereas if we do it all together, you're just adding all this complexity at once. And that's just harder to test.
Okay, makes sense. And so like how much later would withdrawals be enabled?
I said like a few months, I suspect, like, definitely not like a year.
Okay.
Usually our hard forks happen between like 3 and 9 months. I think this one, people will want to see it happen pretty quickly. So I suspect it's like 6 months or less after the merge. But obviously that assumes the merge goes smoothly, right? If there's a big problem with the merge, that'll delay it a bit.
The focus will be on that.
Yeah. But it'll be priority number one. And I think there's also like, people are aware that like there's a desire to withdraw the staked ETH. So it'll be the first thing we want to enable.
Cool. And it's so interesting what you were saying before about rollups, because it really kind of like completely changed the like phases that Ethereum developers had like always been thinking about. Like it used to be like, okay, first proof of stake scaling comes next. But I guess because of just like the needs of Ethereum users that just like people needed scaling now. So I guess like that pushed for like development of all these different solutions. So it's really interesting that instead of having to rely on shards, which would come like, I'm guessing maybe years after the merge, at least like with like computation on them and all that, we have right now like rollups which are providing those scaling solutions, or at least like on their way to, with Optimism and Arbitrum, I guess are kind of the two the two main ones, right? So do these like completely replace sharding? And why I'm wondering like why the focus on just rollups, because there are like so many different other layer 2 solutions. So is there like any reason why, like, I don't know, from your side, like that's kind of the focus?
So I'll start with that question because it's easier. I think rollups are like the nice combination that they provide the security guarantees that are similar to mainnet. And they work, like they're live today. So it's like high security, and I wouldn't say like low engineering complexity because they're pretty complex, but just, relatively low compared to other options. And even within rollups, there's like all of these debates between optimistic rollups versus ZK rollups, and there are different approaches with different degrees of technical complexity. But at a high level, it's like they work and they're secure, so that's it makes a lot of sense to use them. I think with regards to computation shards, it's definitely something we can do in the future. It's like for sure a couple years out, there's a bunch of like unsolved problems with it, and I think more importantly, there's just other more important things kind of on the Ethereum roadmap. That I'd say the biggest one after proof of stake is this idea of state expiry. So the biggest challenge on Ethereum right now is that all the applications are stored on the network forever, and so that means that when you create a smart contract or when you add data to a smart contract, say like you mint an NFT, it creates a new one and it maps it to your address. All that data is stored on the network forever, and so it means every node that joins the network has like a bigger and bigger amount of active data that they need to store, and that just doesn't scale to infinity. What newer blockchains do for this is they have this concept of rent, where instead of like your CryptoKitty or your other NFT being on chain forever, it's like you put a bit of ether, and if you run out, it just gets deleted from like everybody's node, and you can keep a copy yourself and you can revive it, but it doesn't impose a burden on everyone. Because Ethereum is already live and we already have contracts on everything, if we added rent, tomorrow we would break every single contract. That would not be great. So we need to come up with like more elaborate schemes to only retain basically the data on the network that's like relevant, and to give a way for people whose data is not retained to like revive it, right? Like, so for example, if we just retain like the last year of data and you go away for 5 years, we want to give you a way to say, hey, here's how you can actually like back up your data for the network. And so this kind of big area is called state expiry or stateless, depending on the approach you think. And to me, that's like the biggest problem we need to solve after the merge, because it basically, if we solve it, it puts a cap on like how quickly can the network grow and how do the demands to run a node keep growing over time. So yeah, anyways, others might have different opinion. Like, researchers working on sharding might tell you that like their stuff is way more important than, there's arguments there too. But from my perspective, I think, getting the merge done is like priority number one. And once we get that, I think dealing with the state growth issue and finding a sustainable solution there is probably the biggest problem we need to solve. And, the merge plus that plus 1559, then, we're busy for like 2 years already. So we can have another podcast then to get an update.
For sure. On this like rent and like stateless Ethereum, it seems like a pretty controversial topic to me, because, it kind of like when you're using a blockchain, like you expect transactions to be there, like the history to be there forever,
Yeah.
So I think, I don't know, like it does seem like a controversial issue to implement something like that where you lose part of history. Like, and like a question on that, like, so you're saying the idea is that each user would be able to call up their own history, but for example, would a user be able to call up somebody else's history?
Yes.
If they wanted to?
Yes. So anybody, so basically the current proposals, right, and this might change, it's still active research, is basically you keep 2 years of history, like if you're in year 3 right now, year 2 is the one that's still being edited. Year 1 is just like kept as like a snapshot. And then, you kind of skip over like when you go to year 4, you stop editing the previous one and whatnot. And if you want to like bring your data back into like history, you just need to provide a proof of your data, and anybody can do that. So for example, if an application wanted to like automatically revive the history of all its users, and maybe you could pay for that, right? Like imagine you're using Uniswap and there's like a Uniswap premium or whatever that like pays to like you pay and it'll automatically revive all your like liquidity positions and whatnot. Like they could automate all that. You don't have to be the person that stores it. But like someone has to, and if you have part of history that like nobody stores ever, then yes, it would be gone, and that's like the big downside. What I would like, which is a bit more complicated, but my kind of dream feature here is we first do that because it seems like we kind of know how you do it, and then I would like if we could add something like optional rent, where if you don't want to deal with like having to back up your data or whatever, then you could maybe just pay the protocol and say, if you don't pay rent, we'll clear you out after 2 years and you can back up however you want. But if you want to just be stored in the protocol for 10 years or 20 or 100, like here's how much rent you need to pay. And maybe I think that would be like ideal if you could offer users both. It's like either you pay the protocol takes care of it for you, or you deal with it however you want, and you don't have like that long-term guarantee. But we first need to find a mechanism by which we can like deprecate stuff and revive it before we start thinking about optional rent. Yeah.
Wow.
So
Okay.
like
That'll be a
tricky.
that'll be a tricky one. But it's fascinating in any case. Okay, we're coming up to the end of the hour, and this is one question that I really don't want to like leave without asking you. Just like on a broader level, looking at Ethereum in the long term, what does success look for you for Ethereum?
Yeah. I kind of hinted at that earlier. I really see Ethereum as a sort of digital nation, so I think having more and more basically businesses is the wrong word, but like organizations that are built and like deployed on Ethereum and that manage, not only like large amounts of money, but just basically all types, and having kind of the equivalent of like a functional economy on Ethereum, I think would be really valuable. It gives you kind of like, it gives you somewhere to coordinate in the world, no matter where you are geographically. And I think that's really cool. It's also like a playground that we can use to test things, kind of like a test net for the real world economies, where like, there's things like, for example, quadratic funding on Gitcoin that's been really popular. Like if we can test drive this on Ethereum and like show that it works, with like 1 million, then 10 million, then 100, then like 1 billion, then $10 billion. Then it's like at that scale, it starts to be viable to bring those ideas back like into non-blockchain economies and saying like, look, hey, this has been running with like $10 billion for like 5 years. So that's really like how I like to think about it. A sort of economic test net for the real world. Yeah.
Nice. So, right. So when those test nets or like experiments prove to be successful, Ethereum can have an impact that starts to touch outside of its like own kind of ecosystem.
Yeah.
What about just like Ethereum, just like, I don't know if replacing, but like being the layer where like the real world happens?
I mean, I think for sure it's on its way to becoming there, and it kind of has to if it wants to gain like credibility in that. But like there's I guess luckily for people working on Ethereum, like there is more and more like economic activity that's becoming digital, right? And I think Ethereum should probably try to capture as much of that as possible. But there's always going to be stuff like we still live in a physical world, right? And I think it would be good to be able to like export some of the like innovations that we create. Like if you think of, again, Ethereum as a nation, nations have like imports and exports, and it's almost like we import capital, both like financial and talent from like everywhere. And that helps Ethereum grow. But I think if you want it to, be like a lasting thing, thinking about like what is going to be like the export of Ethereum, and I think that's it. It's like new economic ideas or models that we've tried in like fairly contained environments that, might be applied on a broader scale. So that's my hope.
Very cool.
Yeah.
I love it. I love that idea of Ethereum as a nation with its own imports and exports. Hopefully all of those economic experiments will have a like overall positive impact in the outside world.
Yeah. Or if they don't, at least we contain it to Ethereum, right?
Yes.
We don't have to break everything else. Yeah.
just keep yield farming
Yeah.
food coins in this
Yeah.
like limited environment.
Yeah, exactly.
Right. Awesome. Well, Tim, this has been really fascinating. Really kind of thanks for your patience and just like, your time in explaining all these complicated concepts so clearly. I'm sure this will be super helpful for everyone listening to understand kind of all the big changes and milestones that are coming up for Ethereum. So really appreciate it. And yeah, thanks again.
Yeah, thank you so much for having me. This was super fun.